Ed. Welcome to Work Wives Unscripted. Thank you for being here.
My pleasure. Thank you for having me.
Yeah, Ed is our accountant, and we feel so lucky to have him because he explains everything in layman's terms for us, which is it's complicated. We all hate taxes. It's insane that business owners are even allowed to do accounting themselves. So we're excited. We are walking so that our audience can run because we're going to ask all the dumb questions that no one wants to ask. So again, thanks for being here.
Yes, thank you, Ed. We really went from doing taxes, speaking for myself, doing taxes myself, to then working with an accountant that I felt completely in the dark with, to then, if you guys have listened to our episode with our financial advisors, they're actually the ones that introduced us to you.
Oh, yeah.
And
Chelsea
since
and
meeting
Kathleen,
you,
yeah.
we are just, this is how it should feel working with an accountant, to be completely taken care of and feel like you have a better grasp of what you're doing.
Yeah.
But I think before we even dive into the nitty-gritty stuff of all the things that we still are working to understand, we'd love to just get to know a little bit about you and your background and how you even opened your accounting firm.
Yeah, so let me tell you a little bit about my business background. I kind of grew up in corporate finance. So I got my bachelor's degree from Niagara University, started working with Kodak. I had about 10 years with Kodak in a variety of financial roles. Got my MBA from the University of Rochester while I was there. Then I jumped ship to go over to the startup of DirecTV Latin America. So that was a great opportunity to continue my finance career, but also jumped into operations. I was sent down to Mexico to be the GM of DirecTV Mexico, which was a great experience both professionally and personally. Came back to the U.S. and worked for the DirecTV U.S. side of the business, and again, a variety of financial and operational roles. And then AT&T bought us, so I had about 5 years under AT&T leadership.
Wow.
Big company, great experience, but also they went through a number of reorganizations, so eventually my job was eliminated. And that led me, after a 30-plus year in corporate finance, kind of what do you want to do when you grow up, right? And my wife, we have 6 children, so my wife was always the CEO of the household and did a great job with it. But she's like, I want to do something. So we worked with a broker to identify a small business here in Denver, Dubai. It was a residential cleaning company. And she runs that, does a great job, and I was basically her bookkeeper and doing payroll. So, and that just reminded me of where I started. And I was like, it was a blessing to be in corporate America, but I was kind of done with it too. So I was like, I want to do that. So I worked with a broker to try to find a CPA firm that would be a good fit. Found one that was operating here in Denver 30 plus years. The gentleman and I had a great relationship in terms of how we wanted to run the business and treat customers. Unfortunately, he passed away about a year after I bought the business.
Oh, wow.
So we had a year to at least do the handoff with the existing client base, and knock on wood, we kept everybody around except for a few that just closed business because of primarily COVID-related issues. But so I had a good established base to build off of, and we've been growing since then. But that's kind of what got me into it. I like small business as much as I was in corporate America.
Yeah.
The fact that my wife and I own a small business, we also have an investment over in the East Coast that's like a coffee house that we run there remotely. So it's just a good fit with my background. So that's kind of how I got into it.
That's so cool. Wait, I had no idea that your wife runs a cleaning business. Yeah. That's so cool.
Yeah.
Oh, we have
she
to meet
loves
her.
it.
Yeah.
I don't know why she does it, because it's got a lot of small business owners appreciate all the labor challenges that go on, and even more so in a business like that.
Yeah.
So.
Well, I was going to say, I don't know why you like doing why you like working with small business owners, because in my mind, that's probably a nightmare working with people like us.
No, I enjoy it.
Especially
really
coming from your background, I'm like, wow. Like everything that you just shared is so fascinating. I'm like, it gives so much context into how you ended up in this position and probably why you have so much patience for small business owners too. But that's fascinating.
Yeah. What about like working with small businesses specifically do you like?
Well, first of all, I mean, small business is the backbone of America, right? So it's such an important and crucial area. Secondly, I think there's a real need for financial support. When you're part of a big corporate team, there's a separate person that handles just tax or just finance or just legal, right? A small business owner kind of has to be all that. And what we try to encourage small business owners is really think about what you're good at and focus on that. And let experts help you on those things that maybe you're not an expert at, right? Maybe that's finance, maybe that's legal, right? So it's not to say that all small business owners need services like my firm would provide. But if you're not necessarily good at finance, don't feel you have to do that. Just kind of hand it over and let us help you run that part of the business. So that's really what I enjoy is I see that we can help add value to the clients by helping them run the business better and understanding what the numbers mean to them. So
yeah, definitely. How big of a business will you work with? Like, where do you draw the line?
yeah, great question. It's about 10 million, I would say, is probably the biggest client that we have. So
So small.
Most of them though are probably like we have roughly 100 small business clients that we deal with. I'd say most of them are maybe a mom and pop shop that have 2 to 5 employees, maybe $1 million of revenue annually.
Okay.
So that's kind of the sweet spot. We do have some bigger ones and definitely some smaller ones too.
Yeah, definitely.
So,
We'll be hitting that 10 million eventually. Just wait.
My goal is for you to be so big that I have to hand you
Yeah.
over to somebody else, right? You come too
exactly.
big for me. Yeah.
Coming in as these tiny solopreneurs,
Yeah.
but you're there to help us grow.
Yeah.
Love it.
That's so great. And then I was going to ask as well, when you're working with small businesses, what different services do you offer? Like, I know for Katie and I, we mostly just use you for our taxes and then email you questions every now and then.
Exactly.
But,
More now than then. But yeah.
It's like, by the way, here's 12 questions.
Yeah, so it's really 3 areas. One is definitely the tax area. So we do business taxes. So like yourselves being S Corps, or if there's a partnership or a C Corp, those require separate business tax returns, and we do those. We also do the personal tax returns. So we have about 300 plus personal clients. A good number of those are the business owners that also have to do their personal tax return, or just people off the street. So that's kind of the tax piece.
Okay.
The second big piece is bookkeeping. So those are, of those 100 business clients, we probably have about 40 that take advantage of our bookkeeping services. So we're predominantly a QuickBooks shop. So we'll reconcile the bank accounts or credit cards, prepare financial statements for them. If they do have payroll they need us to do, or sales tax, we do all that under the guise of our bookkeeping service that we have. And then the third is more advisory services. So we encourage our clients to just call us like you guys do, right? If you have a question, we want to talk about it. We don't want any surprises, and there's no charge for that, right? We like that dialogue. But at times there are things that turn into a special project. So let's say you guys decide you want to expand and you're looking at buying somebody, and there's some due diligence you have to do. So our firm would offer that service, and then we'd have a charge for that. So if it turns into a project, like we had a lot of things around COVID where people wanted our help to apply for PPP or ERC, things like that. So if it's more of a project, we put that under advisory services. So,
Gotcha.
So those are kind of our 3 prongs.
Okay,
Great.
cool,
Yep.
cool. Just wanted everyone to know if they do reach out to you, what kind of things you can help them with.
Yeah, and things that you can elevate too. I know in the future probably it'd be nice to even take the bookkeeping off our belts, because
Let's talk.
the amount of times that Jill and I are sitting there that we're like, how do we classify this in QuickBooks?
Yes.
It starts to get easier when you have the same recurring expenses, but you
it
have one
does,
of those miscellaneous ones that come through and you're like, huh, all right,
Yeah.
gonna take a lucky guess here.
Yeah.
Do you ever have clients that just like use Excel or something, or just like,
Oh yeah.
oh my gosh,
We have
that's-
clients that have shoe boxes
Oh.
that just bring in receipts.
That's
so.
terrifying.
Yeah, it really spans the globe in terms of what you see. So we definitely prefer people that have some sort of a financial system, and even Excel is not terrible, right? It gives you an ability to track things. So,
Yeah.
but yeah, the more formal, the better.
Yeah, that's fair. Is QuickBooks your favorite, or?
Yeah,
Okay.
I find it very useful. I mean, I'll be honest, it's kind of getting expensive. I think they know they've got a corner of the market that they are probably the best out there at. So we've seen prices going up, and our clients have too. But
Yeah.
to me, it's still the best product out there.
Okay,
So,
cool.
yeah.
That's what we use.
I feel like it's a game changer
Yeah.
using QuickBooks. I can't imagine not having that
I know.
and keeping everything in back of mind, where you have to manually remember to import these things.
Yeah.
And like you were saying, you have clients who have shoeboxes full
Yeah.
of receipts.
Yeah.
Jill and I were talking about it before the podcast, and I'm like, is that an outdated method, or is it really just personal preference?
Like receipts, you mean?
yeah.
Yeah.
Do you
Yeah,
need,
at the end of the day, you do need to have the receipt in case you're audited, right? So if you are audited,
Oh, really?
the IRS agent does have the ability to say, prove to me that you have a receipt. Now, look, it's changed a little bit with the electronic nature of our economy now.
Yeah.
So I've dealt with IRS agents that are more understanding that, okay, you don't have the receipt from the meal that they were at the restaurant, but I can see from the credit card charge that they ate that meal at the restaurant. It makes sense, right?
Yeah, I've literally
so-
never saved a receipt.
Yeah, I know.
That was going to be my
Me
follow-up.
too.
It was just like, if it's on the credit card, you're good.
I know,
Yeah.
yeah, a bank statement will suffice, but maybe,
But
just
this is
maybe.
where
Yeah.
materiality comes into play. I mean, think about the big things. Like if you're going to go out and buy some equipment, things like that, save those major receipts. Those are good to have.
Okay.
The other nickel and dime stuff, I see some clients kind of over-index on that. And if they want to keep them, fine. It's good. You're never wrong to keep a receipt, but you can also overburden yourself with that.
That's good to know.
Very good to know.
Yeah.
I'll
Good to
start
know.
to-
Good to
I
know.
mean, at what point would you even get audited, though? Like, don't you?
Yeah, you want to know the secret, right?
Jill's
Yeah.
like,
Like, how much money
Yeah.
are you having to
I wish
make?
I knew for sure to tell you when you're going to be audited or not. But look, a couple things. One is statistically, it's less than 1% of the returns are audited every year by the IRS.
Wow. Okay.
So it's not a high percent. Now, having said that, there are certain things that may be outliers. There's a thing called a conservation easement, an example, that somebody may invest in that. Those are pretty much audited 100% of the time. Small businesses in general do over index a little bit in terms of audit because, I talked about corporate America. Well, one of the things that an IRS agent can rely on with corporate America is largely they're public companies. They have external auditors that audit the statements, so you can kind of rely on their data more.
Right.
Small businesses, it's a little bit,
A little sneakier.
Yeah, that's maybe sneaky, but just more discretion is the way I would say.
Yeah. Okay.
So there's, I think they realize there's a potential perhaps for just common error too, right? It's not that people are being fraudulent; it could just be error, right?
Right.
But also, small business by definition is small. So if the IRS is thinking of where there's money to be had, they're going to focus on the bigger, either an individual taxpayer or a business that maybe has more.
Right.
So even when I say small businesses over index, I think it's like 2%, right?
Okay.
So it's not huge, right?
Yeah.
So they always have certain things that pop up. I mentioned COVID, so a lot of you are probably familiar with the Employee Retention Credit, ERC, that a lot of people took advantage of.
Yeah.
And the IRS is very worried that there was some pretty heavy marketing firms out there that were trying to solicit business in kind of on a pay-as-you-go approach where you could get hundreds of thousands of those credits, but they were taking 20, 30% of it. So they felt that is indicative of maybe companies that didn't deserve the credit that were charging it. So
Okay.
those are probably more likely to be audited going forward than not. So
Gotcha.
it really it changes with the wind in terms of what they hear and what people are doing. So
Okay.
crypto is another one that they're just trying to get their arms around. I would expect something like that is probably more subject to audit down the road.
Yeah.
So
Okay.
the outliers are where I think they're looking for.
Interesting.
Gotcha.
So
Yeah.
for someone in our shoes and many listeners who are in our shoes
Yeah.
We're probably
that are
fine.
not doing anything about that, safe to say, as long as we're keeping up with our books, writing things off that are truly for business purposes,
Yep.
that's not
You
going
have
to
nothing
cause
to
any
fear.
serious red flags.
Yep. Yeah, you have
Perfect.
nothing to fear. What I always advise people is there are certain things the IRS can rely on where they can automatically know that an error was made. Best example is if you're a W-2 employee, right? That W-2 is given to you by the employer, and the employer gives it to the IRS. So if someone either maliciously or mistakenly puts the wrong number of their W-2 compensation, that's an easy fix to the IRS. They know the number's wrong. They don't necessarily even audit you. They just send you a letter saying, look, you claim 10,000, but you must have missed a zero. We know you made 100,000. And they do the adjustment automatically, right?
Then why
So-
do they make us do
It's
it?
in the
I
pipeline.
know. No, Dave,
It's so annoying.
trust me. Our tax system is more complex than it has to be, but it's good for my business. So
Yeah.
Well, I
I'm not going to change it. But
While we're on the subject of that, even bringing up W-2s, something that
Yeah.
we just learned and now take seriously is actually doing
them.
W-2s, 1099s,
yeah,
that whole shebang for each other. Based on my understanding, is any contractor that you pay over $600 in a given year, you need a W-2 for.
generally speaking, yes. Now, if
Okay.
that contract happens to be like
1099
a C corp, a 1099, it's a
Yeah.
1099. Yeah. So yeah, a W-2 is just when you hire that person as an employee, right? So they're working just for you.
Yes.
You're providing benefits. You're withholding Social Security taxes, all that. they're a regular employee. Your business is a good example where you're going to have a lot of contract labor. You need somebody just for a project, then they're going to go work for somebody else down the street for a project. So you're paying them. So that is taxable income to them. So that's where the IRS has a threshold. If all you're doing is paying them $200, it's still an expense to you, but you don't have to go through the formality of giving them a 1099. And again, the 1099 is W-2 like, that it goes to the IRS, it goes to the contractor that provide the service. So it's the way that the IRS can say, is the contractor claiming all their income?
Okay. So, that
you
makes
give
sense.
them a W-9, right? And then
the W-9 is the precursor to the 1099.
Okay.
So the W-9 is where they're telling you, here's my social security number, my address, et cetera. So it's giving you the information to load and create
the 1099.
1099.
Got it.
Right?
Okay. That makes
So,
sense.
And we have to do those.
You have to do it, yeah. And again, have to, I mean, how does the IRS know what they don't know, right? So if you don't, it's not to say they know and are going to send you a letter, but if you get audited and they find out that you missed it, that's where they do have some pretty stiff penalties for not reporting a 1099.
What's
Yeah.
a typical penalty?
For something like that, I think it's $1,000 occurrence.
Ooh,
So,
that would
yeah, you
just
don't
suck.
you don't want to mess around with it, right?
Yeah.
'Cause, again, you're doing the right thing. It's an expense to you and your business, so that's good for you. And in fairness, that other person should claim that income and pay their fair share, right?
Yeah.
So it's a way to do that. But look, 1099s are not Loctite, because if I'm getting 1099s and some of my vendors are less than 600 or they didn't give me, it's not as if the IRS can add up all the 1099s they have in my name and see that that's what I have in the tax return. It could be probably more because I have some cash, or less than 500, things like that. So.
Okay. So also just keep track of your books and who you pay and how much you've
Yes.
been paid.
Yes. Yep.
I had a question, and okay. No, this is actually a good question, because I ran into this either last year or the year before, of the difference of, just to clarify, let's say I hire Jill to shoot under blink films for a wedding, which happens regularly. At the end of the year, I give her a 10, or she gives me a W-9, I give her a 1099.
Correct. Yep.
Let's say then I hired a copywriting service to do the copywriting on my website. That is different because they're not working for Blink. It's hiring a service outside of your business. Does that make sense?
Yes and no. It has to do with the entity form. Like, you don't have to issue a 1099 to a corporation.
Okay, that's
You
what my
don't-
question
You
was.
don't have to issue me a 1099 as your CPA, because
Yeah.
I'm an S corp, right? So certain forms, all they're looking for is the individual contractor that has to fill out and declare their income, on a Schedule C, by and large, is what it is. So yeah, there are certain exceptions that you don't have to issue a 1099 to, based upon the entity structure.
I
So
feel like
now
that's-
that we're switching to S corps this year,
Yep.
will we not have to fill out W-9s for people that we work
You should
for?
not, you should not be getting a 1099 from your clients, right?
Interesting.
Yeah, as an
Oh,
S
another
corp, yep.
benefit.
Look,
Oh,
you're
okay.
still going to get them, because I
Yeah.
get them as a CPA as well. They don't have to. Doesn't hurt anything, right?
Okay,
But
okay.
yeah, you'll still probably get some.
Okay.
Okay.
Yeah.
That's a perfect lead in to our next question. So we talked to you about this at our first meeting, and I still don't understand it.
You're
but
failing
I'm
this
gonna
class.
Try, I'm going to try one more time to understand
All
the concept.
We always go,
Different?
okay, we get it. And then months pass and we're like, what?
What was that S corp thing? Yeah.
Yes. What is the difference between an LLC and an S corp? And Katie and I just applied to be S corps.
Yep.
Katie got it. I haven't heard back yet. We'll
You're
see.
right behind
See,
me.
you definitely
right
failed
behind
that.
me.
Yeah.
But
right.
yeah, like why would we? I'm just doing it because I trust you and I know it's going to save us money on taxes, so that's why I'm doing it. But yeah, give us the
All
lowdown
right,
on that.
let's try to tackle this. So a couple things. One, LLC versus S corp or some other entity structures we'll talk about. An LLC at the end of the day is a legal structure. It's a limited liability corporation. All right, so it's not really a tax play as much as protecting you and your assets of the business, your personal assets, et cetera. So the LLC essentially puts a shell around your business, that entity, and that's if, God forbid, you did something and somebody sued you, if the LLC is structured properly, that's all they have access to.
Right.
They can't go after your personal assets and things like that, right? Or 401k and all that. So at the end of the day, an LLC makes a lot of sense for small businesses and clients that we have. but it's not so much as a tax structure, it is a legal structure, okay? Now, what are the tax structures? So at the end of the day, excluding things like a charitable organization, there's really only 4 tax structures that the IRS recognizes. One is a sole proprietorship. So you're just a simple business. You don't have this formal structure of an S corp, et cetera, and you just fill out what's called a Schedule C on your tax return. That's the simplest and probably the most common. A little more formal is an S corp. So that's where now that business is a separate legal entity. So it could be an LLC that you elect to treat as an S corp. All right, and it has some payroll benefits that we'll talk about in a minute. But just to finish that line of other entity structures, other than S corp, you can also be a partnership, and they would file a 1065 partnership return. So it's just a different structure. It gives a little bit better liability protection and offers some things on basis accounting that are a little bit different than an S corp. And then the third is a C corp. Think of Amazon, Google, AT&T. Those are big companies, right? And that structure allows them to basically raise capital. They can have stock and offer stock for people to invest in the business, okay? So that's LLC is really not a tax structure. It's more legal. The tax structures are the ones that I talked about. S corp, why is that important and why is it advantageous? Before we answer that, let's just talk about the fact that there's, from a small business standpoint, there's 2 main types of tax you have to pay. One is income tax. All of us pay income tax at the end of the day to help pay for Congress, military, et cetera, right? The other are payroll taxes, sometimes also referred to as self-employment taxes for a small business owner. At the end of the day, what that means is FICA, Social Security, and Medicare, okay? So those taxes as a small business owner and also as an employee, you pay those taxes to basically help for retirement and to help for your medical care when you retire. Okay, so unlike income tax, a lot of people struggle with, and they want less, obviously, right? Because it's hard to touch those and say, how does the income tax I pay help me every day? Social Security and Medicare, it's a little easier to say, okay, I don't like paying it, but I can see where it's going to benefit me down the road. Okay. Now, why is that important in the structured discussion? Because if most small businesses start as just a sole proprietorship, and when you fill out this Schedule C on your tax return, it's nothing more complex than just an income statement. It shows the revenue you brought in, all your business expenses, and how much did you net. For example purposes, let's say you net $100,000, okay? So the IRS essentially looks at that as your W-2. So they're going to tax that $100,000 on both of those that I talked about. You're going to pay income tax on that $100,000, and they're going to say, well, you have to pay FICA and Medicare. FICA is 6.2%, Medicare is 1.45%, so call it 7.5%. But as a Schedule C sole proprietor, you're paying both. You're the employer and the employee. So in addition to paying income tax on the $100,000, you're going to pay 15% on that $100,000 as your contribution to those self-employment taxes. With an S corp, what you can do is set up this separate legal structure, and now you pay yourself as an employee. You are an employee of that entity. When you're a sole proprietorship, you really don't pay yourself. You don't write yourself a paycheck. You just, that $100,000 is your money. You just take draws out of the business and use it, but it's not a paycheck per se. So when you set up an S corp, that $100,000 is now going to be reduced by what you pay yourself as a fair and reasonable compensation. And that's important to understand, because fair and reasonable is it's not the same $100,000 you're making.
Right.
You guys, as an example, you're making that money, and you need that money to grow in the future, to protect yourself from lawsuits that may come down the road, et cetera, right? So there are owner compensation that is different than if you were just an employee. And that's what the IRS looks at. Is, okay, if you were to just hire out your services to be employed by somebody, what would you get paid as a W-2? So let's say it is $50,000, okay? So now that S corp, their income of $100,000 has an added expense of $50,000. So now the net income of the S corp is $50,000. The S corp strategy really doesn't change income tax treatment, because now on your personal return you'll have both a W-2 for $50,000, and that S corp passes through that net income of $50,000 to you as well. So you still have $100,000 to pay Uncle Sam with income tax.
Okay, got it.
But self-employment taxes only attach to the $50,000 of the W-2 pay.
Whoa.
Not the remainder, right? So that's the big savings, okay?
That makes so much sense.
Yeah.
I fully understand that
I
now.
wish
Yes.
it's better if you have a visual to kind of show it, but
Yeah.
that's why an S corp gives you the benefit. Partnerships have some benefits like that too in terms of what compensation you can do with guaranteed payments and all that, but that's really what you're trying to do. So it's a way to save. It doesn't save you income tax, but it does save you those self-employment tax. Now, full disclosure and kind of warning, it's pay me now, pay me later. So if your retirement is highly dependent on Social Security, you probably want to pay yourself more, because the way Social Security works, you get out what you put in. So the more you put in, the higher your retirement check is going to be from Social Security. Now, I know some people don't think it'll be around, right? But that's everybody has their own opinion about that. But the more you put in, the more you'll get out. So a lot of small business owners don't care. They said, they think my retirement plan is the business. I'm going to build this thing and sell it, and that's my retirement. So I don't need Social Security.
Yeah.
But if you have a small business that's not the case and you rely on Social Security, then yeah, we would advise you still pay yourself more. Heck, maybe even still, be a sole proprietorship. Don't go through the complexity of just setting up the S corp and all that. So,
Okay.
does that help?
Yes, that
Okay.
makes so much sense. Okay, so many follow-up questions. I don't even know where to start. But so now that we're as LLCs, we're used to paying ourselves whatever we want, whenever.
Yep.
Some months are
taking a
better
draw.
than others. Yeah,
Yeah.
and we just
Yep.
like Katie and I both just like give ourselves probably the bare minimum and are always just putting money back into our business.
Yep.
So now that we're going to be writing ourselves a paycheck or
Correct.
whatever,
Yep.
how does that work if we do have a slow month? Or like, can you pay yourself more than you agreed upon or less than
Great
you agreed
question.
upon?
It's very flexible, because at the end of the day, any company can pay you as often as they want and
Okay.
as much as they want, right? So let's say if the agreed upon fair and reasonable price is $50,000 for your services, you could get paid every other week. You could get paid once a month. We have some clients that just pay themselves at the end of the year. So the IRS does not dictate how often you have to pay yourself as a W-2 employee, right? That's negotiable, right? But the key is that leftover money, so what you don't pay yourself in the form of a paycheck that's left in the business, it's still your money. You're paying income tax on it, so now you can just take that out as a draw. So you can still write your check just as a draw and not have to worry about paying. It's not a payroll check.
Okay.
So from a cash flow standpoint, it really should not be any different than the way you run it pre-S Corp structure.
Got it.
It's just, you do have to make sure at the end of the day you can prepare a W-2 that shows, yep, here was a payroll that was run, whether it was run every week, once a year. Here's the FICA that I paid on it, the Medicare I paid on it. I withheld income tax for federal purposes, income tax for state purposes. So
Got it.
it's just like a regular paycheck from that standpoint.
Okay.
Yeah.
That makes sense.
So the fair and reasonable wage that you agree upon is just kind of a baseline to have something to work with.
Correct.
And
Yep.
then your numbers can always be changing, whether you have a great year in business where you make double the money, or a year in business where things slow down, you make half the money.
Yeah, and again, not only that, but also service. Just think about W-2 pay can go up, down based upon demand for certain skill sets. And, horse and buggy people used to probably make a lot of money. They don't anymore, right? So,
Yeah.
So it's just, things change and the value of services in the economy is going to go up and down. It is very subjective, I'll be honest with you. So we have not had one of our clients yet be audited for this. The IRS, I think it's kind of getting their attention, because as they look across the nation at all the S Corps, and whatever money an S Corp makes, they looked at how much comes to the owners on a W-2 paycheck versus just a draw, okay?
Got it.
And they found it was very disproportionate. It was maybe 10 to 15% of the money came as a W-2. The remainder is draws, right? So it's at least got their attention that, should it be subject to audit or set some additional standards to provide guidance on what's fair and reasonable. But right now it's really left up to the taxpayer to determine that on their own. So
Cool.
it.
It's definitely going to be something I learn as I go.
Yeah.
For
Yeah.
sure.
Yeah. If we switch from an LLC to an S Corp, does that mean we're no longer protected our personal assets anymore?
nope. So the LLC structure you can still have as an
Okay.
S Corp, as a partnership, as a C Corp. Again,
Great.
it's more of a legal structure. So you would have that for sure.
Okay. So is there any is there any reason you should be an LLC at all then?
Well, you should. I think LLCs always make sense just to protect those assets. So if you just have an LLC and don't go through the process of making an S corp, et cetera, you're essentially going to be treated as a sole proprietorship.
Oh, I see.
And just do that Schedule C.
That makes sense.
Okay.
Which again makes sense for a lot of people. They're small.
Which I could see if you are an LLC and it is just like a side hustle of a business that you don't make substantial of enough income to justify the complexities that come with being an S corp. It's just a better point to remain an LLC.
It's a great
Whereas
point.
in our position, as we're continuing to grow, come tax season, the past 2 years, it's been like, hey, you would have saved yourself this much in taxes if you were to be an S corp.
I think you said I would have saved like $6,000 in taxes if I would have been an S corp.
It can be substantial. But you bring up a good point, Catherine. If you're small, it probably doesn't make sense. If you're netting $30,000 from just a standalone sole proprietorship now, and you go through an S corp and pay yourself $30,000, it's you're not benefiting at all. You're not big enough for this. So,
So that's a good note for anyone who has an LLC. Let's say, I don't know, it's just a personal opinion, I guess, but in your growth, I think it was like right around when we hit the 6-figure mark, it's like maybe start thinking about this.
And
this
you
would
can
be a good
elect it
idea.
down the road. It's not like you have a certain window to do it and you give up that right. You can always make that election down. It's a late filing election that you have to do, but you can make that switch down the road.
Great.
Cool. Yeah. And then on that note, at what point income-wise do you think it makes sense for people to start thinking about hiring an accountant?
You know, I don't know if it's income-wise as much as just what I mentioned earlier about the business you run and all the tasks that you have to do. Is this a task, A, that you think you have the background and the knowledge to do it right? Because you can get yourself in a lot of trouble, right? So, and then if you've got a business to run, whether it's your business and you got to do things, or you're a doctor or an architect or a construction, you just may have so many other tasks that it doesn't make sense to burden yourself with the bookkeeping and the tax stuff, right?
Yeah.
So to me, it's not a level of earnings as much as it is just a level of effort. So
It's actually
makes
insane
sense.
to me that it's legal as a business owner to even file your own taxes. Like that's so concerning because you can really screw yourself over so much over lack of knowledge.
Yep. Well, and again, keep in mind, our tax system it's an honor system.
Yeah.
Right? So everybody has to file a tax return and report their income and all their expenses, right? And other than having that threat of an audit, they're really relying on you to report things properly. Now, do they feel better when you have a CPA doing it because we have a certain standard and code of ethics that we have to live by? Probably.
Right.
But you don't have to be a CPA to file your taxes. You know, just anybody can do it on their own. So,
yeah, I like to think of it too, like you were saying, of just how much do I pay myself hourly, and if it's going to take me 28 hours to do it, then I might as well just hire an accountant and pay them way less than it would have cost me in my time to do it. And
I
try
mean,
to
obviously
figure it
I'm
out.
biased, but I think it's a good investment. And I'll tell you one other thing too. We found through this COVID that with the things like the Paycheck Protection Program, ERC, there was a restaurant revitalization fund that had some good money for people as well. We found a lot of small business owners found they were not prepared to take advantage of those because just basic things. They said, okay, you need to know 2.5 months of payroll. And people are like, I don't know what that is. I'm a Schedule C. I took draws out of this. So I think a lot of business owners realized that they had to have good financial data to be ready for things like that if they happen to come up. So, and again, I'm biased, but I do think you want to have good data to help you run the business.
Yeah.
You know, you're doing this. Taxes to me is an afterthought. It's something that comes out of that. But just knowing how the business is doing, that's what I love getting into, is learning your business and what are the cost drivers and how does that affect the bottom line. You know, that's I think where there's value added.
Yeah, for sure. Yeah, we always joke that like there's like no one I'm more excited to see my income grow than my accountant. 'Cause you already know the numbers so well, so I just can't wait for the day that I'm like, go ahead and check out my bank account really quick, Ed, and you'd be like, whoa,
Everything changed.
like I told you I'd do it. But yeah, so funny. Okay, great. Well, let's get into taxes now.
Let's get into taxes.
How the hell, other than switching to an S corp, how do we lower our
Tax liability.
Tax liability, yes.
Well, a couple comments. I mean, I think at the end of the day, you got to realize that if you're blessed with a business that's going to make money, it's a necessary evil, right? Because I joke with clients sometimes that the easiest way to not pay taxes is lose money. Is that why you're in business? You're not, right? So I would encourage people, don't be penny wise, pound foolish, right? So there are things that you can do to help lower the taxes we'll talk about, but also realize that it's good to have income that is taxed because it shows that that business that you're putting your blood, sweat, and tears into is actually making money, right? And unfortunately, part of that making money is paying your fare to help pay for all those things we talked about, right?
Yeah.
Having said that, there's a couple things to be done. One is the general strategy is always if you can push out income, revenue, and pull forward expenses, do that. So if you can have, a project and whether you recognize the income in December versus push it to the next year, that timing is good for you.
Okay.
And if you can pull expenses forward that you would have incurred next year, that timing is good for you. Now, timing is a double-edged sword, right? Because it helps you now, but it can hurt you later.
Right.
So those are just some timing things that have a short leash, I think.
Yeah. Well, that's what, it's so crazy because at the end of the year is where I always, I get competitive with myself and wanting to be like, I made this much more than last year, but then I'm
Right.
like, but maybe
And
I
Uncle
should
Sam
not
loves
take
that, yeah.
And I'm like, wait, no, I shouldn't take that until I won't invoice them until the new year. Then I'm like, maybe I should
Yeah.
just buy an expensive camera right before January 1st.
Okay,
And then
now
it's
that's another. That's what I was going to
you
next.
know?
Is if your business requires investments, capital investments, you need a new copier, you need new equipment, you need a new vehicle, whatever your business is. If it's a necessary business expense, I would encourage you to do that.
Okay.
And then there are normally tax laws that have certain advantages around capital assets. That there's this thing called bonus depreciation that right now it's going to start to phase out, but last year was the last year we could do 100% bonus depreciation. So you could buy that big piece of equipment for $50,000. Normally an asset like that, the IRS says, hey, that's going to have value to you over the next 5-10 years. So amortize that, depreciate that over 5 or 10 years. But as a way to encourage the economy and investment, they give you this bonus depreciation where they'll let you take all that expense in that year.
Oh, yes.
That's what I
okay.
was
We were going to
talking
ask
to
you
you
about
Yes,
this.
okay.
Yes.
about
So-
assets.
Yeah,
is-
so that's one thing is bonus, but separate from bonus depreciation, there's also this thing called Section 179 deduction, which essentially does the same thing. It gives you that ability to accelerate the depreciation. So does that help you now? Absolutely, right? So your income this year can be greatly reduced by that one-time depreciation. But unless you're going to make that investment every year, those next years you're going to be hurting because you're not going to have that 1/5 or 1/10 of that asset cost that would normally have been depreciated. It's going to hurt you in those future years. So if your business is such that you're growing and you always have this constant churn of assets, then those are good strategies to do.
Okay.
But a lot of people sometimes, how many vehicles do you need for the business or copiers and things like that,
Yeah.
right? So it has limited availability. The other thing is, in this you probably talked about with the financial advisors you had on too, retirement plans for business are good investments too, because they allow you to defer income. It's an expense that reduces that taxable income and also provides for you down the road for retirement. So we talked about Social Security. So this is why some people don't care about Social Security, because they've set up a 401k or a SEP or a simple plan, right?
Yeah.
So those expenditures of money that you're putting into those retirement accounts reduce your income. Now again, word of caution, you are giving up access to that money until you retire.
Right.
You can always get it, but there are penalties, right? But again, it's the IRS has tax law that tries to encourage certain behaviors, and this is a good example. They want people to plan for retirement. They want people to retire or rely less on Social Security. So they're giving you the tax benefit that you can take that expense as a business, reduce that income, and it's not going to be taxed on the people drawing it out in retirement until their retirement age. So things like that are good plans to basically reduce that taxable income now. This is not so much business, it is personal, but charitable contributions are another one that a lot of people look at. Now again, the same comment about making sure you don't chase the nickel, when you're spending the dollar,
Right,
right?
right.
So you got to think about what tax bracket you're in. So I'd say most people are probably in that 22, 24% tax bracket. So to get the benefit of a charitable contribution, if you donate $1,000 to your church, you're going to save $222 or $240. So, but you're giving up $1,000
Right.
to save that money, right?
Yeah.
Right.
And also, you have to be able to itemize to get that benefit too. So, so again, there's certain things you can do that we can work with clients, or other CPAs can work with clients to try to bring in legit expenses that help reduce that taxable income. But I really hope you're blessed with having net income at the end of the day.
Right.
Tax, because it's what provides funding for your paycheck, for those draws that you're going to make, et cetera. You got to make money in order to be able to take it out of the business.
Right.
That is a positive spin on taxes. I feel like
Yeah.
I will
Yeah, I
carry
know.
that. I will carry that with me to say I am blessed to have a business that I am taxed on.
Yeah,
exactly.
at least I'm making enough
What
money
a
to be
blessing
taxed.
if you're
taxed.
writing the check, right?
I love paying taxes.
Yeah.
No, that's all a good point. I will say the investment accounts were a good thing for us too.
Yeah.
That all of these are just, I wish I knew at the beginning, and I know in the beginning it can feel like such information overload.
Yeah.
But now, having had my business since 2017, and if I could have started this initially
Yeah.
when I was making profit, I would just be that many more years ahead. So I know it can
Yes.
sound scary to hear and really confusing, and it's something that we revisit 25 times to
Yeah.
fully understand, but
Yeah.
bite-sized pieces.
Yeah. Yeah.
It made me think is another thing too that I think helps save taxes, and it's more, I think, a missed opportunity. A lot of people always wonder, like, what is a business expense? What can I write off, right?
Yes.
And what I would encourage, just at the end of the day, think about everything you do that is incremental to you owning your business. If the only reason you're spending that money is because it is related to the business, it's a business expense. The IRS just looks for things to be ordinary and necessary. So as they look at your type of business across America, is it ordinary that you would have to invest in cameras? Absolutely.
Right.
Is it necessary for your business? Absolutely. It's going to be deductible, right? Do you need a Maserati as your vehicle?
Maybe.
Probably not. Yes, maybe. Work with your CPA. But that's where, they're going to be looking for those things that are obviously an abuse. But if it's just normal stuff that you're incurring, feel comfortable taking that as a business expense, right?
Yeah.
A, you're probably not going to be audited. B, if you are, you ought to feel comfortable saying, look, the only reason I'm incurring this is because I have this business. In order to run my business, whatever that is, it's an ordinary and necessary expense to generate that income. So I should be able to take a deduction for it.
Oh, that's so good to
Okay.
know. Okay, my specific question with that.
The Maserati, you can.
Can I get a Maserati?
Yeah. No.
Can I write off the gas? Like, I would say 85% of the gas that I use is coming to this office and then also going on shoots. So
Yeah.
can I write off my gas? Like, most
You
of
just
it?
picked a bad example, because essentially the IRS is going to look at that as commuting. Like when you're a W-2 employee, just driving to your work every day
Right.
and going home,
You
that's
don't
not,
get to write that off.
it's just commuting, right?
Okay.
What you can do is when you're going out to meet with clients,
Okay.
right? If it's business related, you're going to a business luncheon.
Or you're
you
going
have
to
a
a
conference
shoot.
to go to. You have a shoot,
Okay.
right? So again, incremental to helping to generate that income.
Gotcha.
Now again, you could argue, wait a minute, I got to commute to the office, but yeah, that's part of
everyone
having a
has
job,
to, yeah.
So
Okay.
they don't give you that. So
Which,
Okay, that's
correct
good to
me if
know.
I'm wrong, is there a standard deduction for mileage? So
yeah.
with your business, there's a standard deduction that you can take, assuming, hey, yeah, I used my car for business. And then if you end up using your car substantially for business, that's like 70% for business, and that's over the standard deduction, that's when it would be important to really
Yeah, it's
track your mileage.
kind of, yeah, there's two different approaches you could take, right?
Yeah.
For the people that are just using that business asset, marginally for the business, that's where the IRS says, don't try to track your fuel, your oil changes, and allocate X% to the business versus personal. We'll just give you the benefit of the doubt, and every mile you drive for business, you get, I think I just read the other day that in 24 it's going up to like 67 cents a mile. As a
Wow.
deduction, right? So that's an easy method. That's called the standard deduction method for mileage. The other approach is you have a major business that has vehicle needs for it. So in those cases, you get to deduct the actual costs of the vehicle. So number one, that vehicle cost is an asset, so you can depreciate it. And there are some bonus depreciation rules for vehicles as well. The interest you pay on the loan for the vehicle, you can deduct as a business expense. The fuel costs, the repair costs, the oil changes, all that. So it's kind of actual expense versus standard deduction. So we normally look at both ways to see which is better. Unfortunately, once you switch to actual method, you're kind of locked in. You have to use that approach going forward. So
I see.
Got it.
yeah.
Okay. What about?
I actually had a good one. I don't want to forget it yet. Okay. Here's a good example.
Yep.
So Jill and I are best friends,
That's the one I was
but
gonna
we
do.
also we also talk about business all the time. So something
we're at drinks.
so something I run into, you were going to ask the exact same thing, is after work, we're like, you know what? We need to talk about the podcast. Do you want to go get happy hour? And then we sit for happy hour, and then we are just catching up on our day, and then 80% of our happy hour is truly talking about work. And then we always run into the thing where it's like,
Can we use our business
can we
card?
use our business
write
card
this off?
for that happy hour? Was that happy hour necessary for business? I don't know.
Yeah.
But that's the thing where I'm just like, how does that work with client meetings, especially when you're self-employed? Because I don't go on that many client meetings.
But
And
we hire
business
each other a
partners.
lot, though. Like if the IRS looked at it, they would see that we contract for each other.
Yes.
So
And we're talking about business all the time. So where does that land? Because that's a very
business,
nitty-gritty.
Yeah, there's a legit business expense of building your business, networking, taking your clients out for lunch to talk about business, things like that, right? You're trying to either promote new business or retain your existing business. So ordinary and necessary.
I got a wine and diner, you know?
Got again, this is where if you are audited and you just have to use your judgment, you know, if it's obnoxious how much you're spending on the meals and the drinks and things like that, you're probably going to attract the attention of a potential audit, right? So you just have to be very reasonable about that. The other thing is the IRS kind of caught on to this a few years ago where technically speaking, if it's classified as entertainment, there are no deductions for entertainment expenses anymore.
whoa.
So when
what?
people buy like Super Bowl, go to the Super Bowl, that's not a business expense. The meals, the travel, but they saw a lot of abuse and things like that. So entertainment expenses, they kind of nixed in this big tax law change that they did back in 2017. So
when I'm classifying in QuickBooks meals and entertainment, does
it's
that just
more of a meal.
Meal.
okay?
Yeah.
But that's
You only have meals.
okay.
Yeah,
but
you
that's
don't
still a
entertain.
write-off, though.
Yeah, meals.
Okay.
Yeah. Now again,
I was like, I need to go
but
back.
but this is
Everything.
another way that the IRS gets around some of these things. If they're kind of onto you, right? They know that some of this abuse might happen. Meals normally you can only take 50% of the meal cost, right? Now, last couple of years they had an exception with COVID, and they were trying to encourage people to still go to restaurants. They allowed you to deduct 100% of those meals costs in restaurants, right? But it's their way of saying, look, people can get away with certain things. All we're going to do then is when you say you have a meal, we'll only allow you to deduct 50% of it. So but again, there's, just use your judgment. There's things, you take your example to the extreme. You could also say, well, then I went home and I talked to my husband about work, and
And then we bought our
slept, and
groceries
when I
at
was-
Costco.
Yeah, and I was
with-
sleeping and I had a bad dream about work, so that bed I got about.
And I bought a
you
new
know,
mattress
yeah, right.
under my
For work.
That's true. I could see
Yeah.
where you can really push the spectrum,
Yeah.
Right.
but just make those judgments in good faith, which I genuinely do think we do. But it's good to know.
Yeah,
It's good to know.
yeah.
Yep.
Like, can you explain yourself to the IRS comfortably
Right.
or not?
Listen. I swear.
It's all for work.
Well, we tell people that it really is a function of your risk profile, because there are certain parts of tax law are definitely black and white. My W-2 example, right? Your W-2 tells you what your compensation is. There's no gray there, right?
Yeah.
It's whatever that W-2 says. Other areas there may be more gray. So if you're a high-risk person, then you might want to push the envelope to where you're very aggressive. If you're very low risk, you might want to take the lower end where you're more conservative. Totally the client's choice.
Yeah.
So
Good to
Makes
know.
sense.
Yep.
I'm
Good
a
to
high
know.
risk girly.
you want that Maserati. So let me talk about a few things that are a little bit new or on the horizon. One is, we always try to keep our clients aware of things that are changing either in Washington from a federal standpoint or Colorado from a state legislature standpoint. The one that's pertinent for Colorado is something called family. It's the family medical leave insurance or something like that. I can't remember the exact name. But essentially what it says is that if you have employees, if you're less than 5 employees, every employee has to contribute out of their paycheck 0.45% of their pay to this family fund. If you're an employer that has more than 5, you actually have to match that 0.45. So it's a little bit like FICA, where there's a match, right? So what is that being used for? This past year, 2023, all that money was being taken out of Colorado paychecks to build a fund of money that now in 2024, if one of your employees has a qualified medical leave issue, pregnancy, death in the family, mental illness, by law, by Colorado law, they can take up to 12 weeks off of work. And they will basically make a claim, just like unemployment, they will make a claim to the state of Colorado and the family fund that has been built, and they will be paid out of that fund. So as an employer, you need to be aware, number one, you should have been, if you're more than 5 employees, you should have been contributing out of your paychecks to your employees this past year, the 0.45%. Even if you're less than 5, your payroll system should have been taking that 0.45% out and being put into the fund. Secondly, by law, if they do have a qualifying medical situation, and you don't really get involved in that by like HIPAA law and all that, but they will file with the state, and if the state says, yep, this is a qualifying medical leave, they'll determine how much they pay. So just like on unemployment, you don't get paid 100% of what you are making. So the employee may get 50%, 60% of what they were normally getting paid while they're on medical leave. It's paid by the state out of that fund. You have to have that job ready for them when they're off of that medical leave.
Wow.
So you may have to backfill temporarily, but when they're ready, medical leave is over, I come back and my job's still available for me.
Okay, this might be a really dumb question. But in our position, or any female solopreneur for that matter, if they have an S corp, you are the business and then you are the employee of your business, and then say you have a baby. Does that?
Great question, because you're the owner, right? So the owner has an option to opt in or not. Most owners, I'll be honest with you, opt out.
Okay.
Right? Because how much is that going to be compared to what you're normally making as an owner? Don't know.
True.
But it's but you do have the option to opt in. If you opt in, you're in for 3 years. So you can't like jump in and out. I know I'm going to have a baby next year. Let me jump in and then jump out. So for 3 years, you're committing that you're going to have it's not huge, right? It's 0.45%. And I think it's even like unemployment where there is a cap. It's up to a certain amount of compensation that you pay.
So if you are in our position and then you're like, I'm planning to hire some employees, so I'm going to opt in, and then I'm locked into this for the next 3 years, then maybe that would be a good practice if you plan to expand your team.
Correct. So I guess the main point in bringing this up is it's all very new. So there's going to be a lot of questions about what qualifies for medical leave, is it eligible? I think you're going to have a lot of employees that maybe try to take advantage of this, and they may be surprised to find out that, well, wait a minute, I'm not getting the same paycheck. Just like unemployment, a lot of people think they're going to get the same pay that they did when they got let go. So I would prepare yourself to be up to speed on it. The state of Colorado website has some good information on families, so that's something to check into. And then at the federal level, there's 2 things I would bring up. One is back in 2017, there was a pretty major piece of tax legislature that passed, TCJA. It was a Tax Cut and Jobs Act. Had 2 main things that happened. One is corporate America. So if you were a C Corp, those normally paid like 35% taxes. Corporate structure is not the most tax efficient structure because it has what they call double taxation. But it also used to have a very high tax rate, 35%. When TCJA got passed, it got lowered to 21%. Number 2 is the personal income tax rates. I don't think we've talked about this, but our personal income tax rates are a progressive schedule. So your first $10,000 of income, depending on what your tax filer status is, you're only going to pay 10%. From 10,000 to like 40,000, you're going to pay 12% on that band. So it's not the 12% goes retroactive. It's every time you go into the next band, you pay. That's why they call it a marginal tax rate. You're in that next margin. So TCJA, generally speaking, all those tax brackets were higher before TCJA. So if nothing happens differently, and it's hard to predict what's going to happen in Congress these days, right? So there's a big qualifier. But if nothing happens, TCJA sunsets at the end of 2025. So all other things being equal, all of us will see tax rates go up in 2026. So to our earlier discussion, we're saying one of the general things we always tell people is defer income, pull in expenses. There could be an argument if you think 2016 is going to be a high income tax, you want to recognize all your income in the next 3 years. You know, that it's a little different than a normal strategy. So just something to be aware of. Keep your pulse on what's going on with Congress. Maybe they'll come together and reinvigorate some of those things. Like they've already said, the corporate tax is probably going to stay at the 21%. It's not going to go back. But will they renew some of the things that have advantaged small business and us as persons? We'll see what happens. So,
question for tax brackets.
Yeah.
It's like a known statement that if you're married, filing jointly, you get tax benefits with that. But let's say you and your spouse make significantly different amounts of money where your spouse's income could put you in a higher tax bracket than you would be if you filed individually.
Yeah.
I'm thinking of you in this scenario. Where do you weigh that spectrum of if it's more valuable, or does it work more to your advantage to file individually if your partner makes significantly more than you and it bumps you up maybe 4%, 6%, whatever it may be?
Couple things. First of all, I always advise clients get married for the right reasons, not tax, right? Get married for
Straight
love,
for tax, baby.
not for tax, right? Yeah. Secondly, what you're saying is not necessarily true anymore. It used to be that there was a tax penalty, tax benefit, and it had to do with those marginal tax brackets that if you were single, when you added your husband's, your partner's income, the married filing tax brackets had different break points than just 2 times the single rate. That's not true anymore. So now those tax brackets we talked about, when you're single, it goes right to the same band if you're married. So it really doesn't cost you more from that, with one exception, the highest tax bracket. So the highest tax bracket is 37%. So you will fall into that tax bracket as a married couple faster than you were as 2 individuals.
Right.
But other than that, you're going to be in the same tax bracket you would have as an individual.
Okay, that's good to know.
Yeah, now there are some other exceptions with standard and itemized deductions or certain, what's another one? Some IRA stuff that you can do. So there's certain things that do vary a little bit, but it's not as egregious as it used to be.
Quarterly taxes.
Yes, you want to talk about
Are
those?
they required? Do you have to pay them?
So again, let's go back to the 2 different types of taxes.
Yeah.
Self-employment payroll taxes versus income taxes. So because when people mention quarterly taxes, sometimes they get confused. So from a pure self-employment payroll tax, those do have to be remitted at least once a quarter. It depends on the level of payroll you have as an employer, but when you're writing a paycheck to somebody and taking FICA and Medicare out, as well as they're telling you, I want to withhold for my income tax so much to Uncle Sam and so much to Colorado, you as the employer are now the fiduciary of that money. So you have to turn that over to the government, and you have to do that at least once a quarter. So quarterly taxes for payroll, there's no messing around with that. You have to file, it's called a 941 every quarter. You report to the government as the employer, here are my wages, here's how much my employer and employee contributed to FICA, Medicare, here's what they wanted me to contribute on their behalf for income tax, and you do the same for Colorado, okay? So those have to be paid.
As an S-Corp, mandatory. You don't mess around.
As an S-Corp, it's really, it doesn't, any corporation, any entity structure where you have payroll.
Okay.
So if you're writing a paycheck, because even a sole proprietor, as much as I talked about they have a Schedule C, a sole proprietor can still hire people as W-2s.
Yeah.
Right? So your employees, you have an obligation to pay them, withhold taxes, have them contribute to FICA and all that when they're a W-2.
Got it.
So that has to happen for purposes of self-employment. Income tax. So income tax, when you're a W-2, well, let me back up. Our tax system here is referred to as a pay-as-you-go system. So at the end of the day, when you fill out your 1040 and it shows that you owed Uncle Sam $30,000 in taxes, they don't want you to just write that check on December 31st. They want you to pay just like any business, right? The IRS is a business, right? You wouldn't want everybody to pay you for services in the last day of the year.
Yeah.
So the government has to run, so pay as you go. They want people to pay their expected income tax of the year as you go. A W-2 lends itself to that for most corporations that pay weekly, biweekly. Out of each of those checks, you're contributing what you think you will owe for income tax to the federal government and your state, right? Mm-hmm. Now, when you're a small business owner, you don't have, if you're not an S Corp, you don't have that natural W-2 for yourself.
Yeah.
So the same thing, a sole proprietorship, that Schedule C that I talked about earlier, where we had $100,000 as taxable income, when that flows into your tax return and creates income tax that is due, the IRS is going to say, well, wait a minute, you should have been paying me that throughout the year. And that's where you pay it quarterly. So you pay a quarterly estimated tax. So for both of you that kind of have a mixed marriage situation where the spouse is a W-2, you're self-employed, you want to either have your spouse hold more out of their paycheck to account for your combined income, or keep that as is, then work with your accountant or somebody else to estimate what your tax impact is going to be and pay a check to Uncle Sam in the state of Colorado once a quarter.
Okay.
So yes, you have to. If you're going to owe the tax at the end of the year, you should be paying it throughout the year. And what happens if you don't? They will charge you two things. One is there's normally an underpayment penalty that they'll look back and say, you should have paid me this much in Q1, this much in Q2, you didn't. There's a penalty, and they'll often add interest as well, because you basically took a loan from the IRS. Yeah.
Okay.
So,
Good to know. I'm gonna have
sorry,
to
I
start
wish I
doing
could
that.
tell you otherwise on that one, but
Yeah.
yeah.
I've never paid quarterly before, so now
No.
that I'm an
Yeah.
S Corp, I'm gonna have to start doing that.
Yeah. Well, I did last year and I didn't this year, so that's gonna be fun.
Yeah. Woo. Taxes just are the worst ever, but it's okay. We're gonna have a positive spin on them today.
We're empowered by Ed.
Yeah,
We
exactly.
are blessed
That's
to
right.
have
Very
this
good that you're blessed. Yes.
Cool. That makes sense.
Yeah.
As we wrap this up,
Yep.
someone's sitting there and they're like, I'm stressed. I listened to this whole episode. I'm stressed. I'm worried about taxes. I need to work with an accountant ASAP. What is something they should do right now of just reconciling their books, really making sure everything's organized? Are there tips that you have for someone before they even hire an accountant to make your life easier?
Yeah, you hit the nail on the head. If you have some sort of book or record, right? Whether it is a shoebox, if it is, get it organized. If it's a spreadsheet, get it organized, get it up to date. If it is something like QuickBooks, Quicken, just have all those financial transactions ready to go. If not, you're just basically going to pay more to the CPA or accountant you're going to use to do your taxes, because they're going to have to do that for you. So you know your business better than they do, right?
Yeah.
So we struggle at times with a lot of clients when they give us that data and it's not categorized. What does this vendor do for you? We don't know. There's some obvious ones. Okay, it's a Comcast bill. I get it. It's a utility, right? But XYZ company, given for your business, what are they doing? Is it contract labor? Is it advertising? So try to put your arms around what those major categories are. And what I tell people is normally refer to, you can go online and look at what a Schedule C is. You can look at the 1120S for an S Corp. And as I said, it's basically an income statement. So it's got revenue up top, and it's got what the IRS thinks are the normal expense categories: rent, labor, insurance, taxes, right? And then there's always an other. So categorize your expenses in those normal type categories would help a lot. The other thing I would just say, prepare yourself to have very honest, open discussion with your accountant. It's a little bit like an attorney-client privilege. Don't feel that hiding something from your accountant is to your benefit. It's better to be fully transparent with them. Let them know where all the skeletons are, what you're doing, what you're thinking of doing, what you did before, right? As a CPA, that code of ethics I talked about, legally, we can't talk to the IRS about you without your authorization. There is a power of attorney form that I have to have when I call the IRS that says I am authorized on behalf of my client to talk to you. And it's about this specific year, and it's about an income tax issue or a payroll tax issue. So the IRS is very good about that. I can't pick up the phone and call and say, hey, you ought to check out Catherine. She's got this.
She's
knowledge
really
already.
messing around. I don't know.
So I can't do that. They
Okay.
would say, what's your authorization? Is it on file? Show that you have a signature. So So I would just use that to your advantage. It's better. It's just like when you go to a doctor. You don't want to lie to them about how you feel. Tell them everything.
Right.
And then together we'll work through it and figure out what the best thing is to do.
Yeah. And I would say you do a really good job of not making people feel dumb and just like making people feel empowered. Because I think that really is the scariest part is your first time working with an accountant. You're just like, oh no, they're going to be like, they're going to like see my QuickBooks and be like, why do you even own a business? Like, what are you doing? Like, it's just scary.
I feel like that's been our biggest work through this year of just getting over our own pride and fear of being judged, of opening up our accounts and being honest of just, this is my business. This is where I'm at. If you want to work with me, awesome. And I think that has been so helpful for us, especially is because it's these silent battles you go through on your own. And then you feel that much more stress trying to work through things that you're not an expert at.
Yeah.
Well, we are small fish in a big pond. I know you mentioned that you are taking on new clients.
Yeah.
If we have anyone listening that is interested in reaching out to you,
Sure.
We would love to connect you with Ed. He is awesome. So feel free to reach out to us, and then we can introduce you to Ed directly.
Yep. Send them on my website. And
awesome.
You've got my email as well. So
yeah. What is the name of your business in case people want to reach out?
Balcerzak Financial Services.
Perfect.
Yep.
Yes.
LLC. So it is an LLC. It's been made an S corp. So
better be.
Awesome.
Yeah, exactly. After I told you, right?
He's like, oh no, I'm just an LLC.
Well, we'll include that in the link in the description.
I appreciate that.
And thank you so much for your time today.
My pleasure.
Truly.
That was
Thanks for having
super
me.
helpful.
Yeah.
Appreciate it.
Appreciate it.